Ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. Today's date is June 17, 2016. This is Friday, and we're heading into the weekend, which means we're heading into the week that is going to encompass the EU referendum in the UK. And that event has been long anticipated, and the vote is pretty closer than what people expected. And so anything can happen, and the anything can be a huge impact on the currencies, all currencies around the globe. And so we're going to be paying attention to some key technical levels in trading next week. Now, if you're not up to it, take the week off. Don't trade. In fact, come to the Attacking Currency Trends course on Friday, and learn for the future, as opposed to trying to pick what may happen in a random event with random liquidity, with illiquid markets, and volatility that's going to be going all over the place. Wouldn't you rather take the money that you're going to lose on Friday after the vote and put it into education on Friday that's going to last you a lifetime? I'm afraid that some of you traders are going to go into next week on Friday and lose all your money, and we'll never see you again. Don't make that mistake. I want to see you come back on Monday and Tuesday and Wednesday and Thursday of next week. I don't want you gone, so be aware of that. Now, if you are going to trade, there is time between Monday and the time of the vote that may offer you some opportunities just for a trade. Okay, just for a trade, not to take it into the referendum, but to provide you with low risk opportunities. And when I speak of low risk opportunities, I want to trade at levels where I can define my risk and limit my risk against extremes, or against levels that I think are a dividing line between bullish and bearish. So what are they in the pound versus US dollar? Well, if you take a look at this chart here, and you just look back over in time and kind of blur your eyes, we've been in this range here. This range has extended up to about the 147.69 at the peak, down to 138.34 below that at the lower end, and in between there is most of the activity has been above the 140 level on the downside, and let's call it the 146.33 to 66 level on the top side. And I'll outline why those levels are important. Let's look at the downside first. The 140 level, of course, is a key level. Why? Because in the month of April, where was the low? 140.04. Where was the low in trading just yesterday? 140.11. So is that level going to be a significant level on the downside? Say yes. Yes, of course it is, Greg. And then what other level is important through here? Well, I'm going to make this whole area yellow here. I'm going to say that this is a big line in the sand between 140.04 and 140.54. Let's call it that, okay? And why is that? Because we have a lot of swing lows that came in between those two areas, okay? A lot of swing lows in between those two areas. And when you have a lot of swing lows, the market remembers those levels, and so they're going to say that this area between 140 and 140.54 is our key level on the downside. Stay above it, it's more bullish. Move below it, it's more bearish. And so traders, if we see the market come down to that level, we might expect that we see traders buy against that level and force the market back to the upside, just like it did in trading this week. It only makes logical sense, especially before the vote, because the market doesn't want to be at an extreme during the vote. Typically it doesn't, okay? It wants to be somewhere in the middle. I wouldn't be surprised if come Thursday and Friday, the market is right here, near the 100-day moving average, right in between this whole area. Now, on the top side, what is most important? And if we take a look at the top side, and we look at this high right here, 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 and in between we had a few, two bars that went above it here, we had 2 or 3 bars that went above it here, and 1 bar that went above it here. And so for the most part, over the last, that area has been the ceiling. In addition to that, we have the 200-day moving average moving down. You can barely see it underneath there. It's moving down toward that yellow area. Another couple of days, we're going to be near the 146.66 level. And we have this trend line that cuts across as well, and that's moving lower as well. So all these things are kind of converging into that area, and that's going to be a key level on the top side. So on a move higher before the vote, if let's say on Monday or Tuesday the market starts to move higher and squeeze higher, and we get up to that area, I would expect something similar to happen that it did on the downside, for the market to go down, in this case go up and come back down. It would just make sense to me. If it doesn't, if it breaks outside of those ranges, get out. Okay, don't fight it. That's like your one trade of the week in the pound sterling. Do that. And even then, if you don't feel comfortable doing it because there may be some pull, and that's, you know, then don't even trade this pound sterling. Don't even get near it. And also understand that if you have some profit, take the profit before the pull comes out and screws you, because it'll get you. Okay, so understand those things, but those are the levels in the pound versus US dollar. Let's take a look at the euro versus US dollar next. And this is the daily chart of the euro versus US dollar. And what gets your attention on this chart? I'll tell you what gets my attention. First off, is that I always look at the low for the week, and when you put a trend line across here, which is already there, I'm going to redraw it. You see that our low price for the week came right against that trend line. So that trend line is going to be an important level. In addition to that, let's go before that and let's take a look at this low. Let's take a look at this low. Let's take a look at these highs through here. Let's take a look at this high right here. And you see that green line that kind of cuts across, and it's bearish below and bullish above, and bearish below and bullish above, and bullish above here. That level is going to be important. So if I were to say what is the extreme for the euro versus US dollar, I would say this area right here. That's going to be our line in the sand, where we think if the price stays above it, it's more bullish. If the price goes below it, it's going to be what? More bearish. And so we look for the break to the downside on any sort of move below that area right there. So that's our support extreme. On our top side extreme for this currency pair, I will give some credence to this area right here, which was a swing high. If I can find my arrow, was a swing high. So that's going to be a level of importance. It's okay. It's not necessarily great, because you can see the market didn't really pay attention through there. The other key level, though, is going to be at the 114.35 to 65 level. And I have to go back in time to show you why that might be important. So I'm going to just move back a little bit in time. I'm going to stop right there. I'm going to take my arrow. I'm going to point to highs. 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 All these highs, swing highs, had the market move lower against those levels. Yes, we went above it here for two or three bars and then moved down. Yes, we went above it here for one bar and then went down the next time. If I move forward and take a look at more recent time, we went above it again for 3 days here, and the market moved below it. So that level is going to be key. So if I, in summary, if I were to say what are the key levels on the top side and downside for the euro versus US dollar, up here it's over there, and that down here it's this 111 level, and move outside of that range and look for further momentum either to the upside or the downside, and that's how I trade it. In between, we have the 100-day moving average. That may be a barometer for bullish above and bearish below. We've been above and below it over the last few days, so look for a momentum away from it, okay, and then look for the test of the other extreme, and you can go with that idea. Let's take a look at the dollar versus yen, and the dollar versus yen is trading at the lowest level since 2014. And in addition to that, this week, what did we do? We went below this 105.17 to 54. Okay, this high is 44, this low is 17, this low is 54, and we went below that area. Guess what? We need to get back above it in order to push this market back, in order to declare that the selling is over for the dollar versus yen. So earmark 17 to 54 as an area that we need to get back above on the dollar versus yen. Okay, and then in addition to that, the 200-week moving average comes in around the 106 level. It's going to be about the 106 level next week. So we need to get above that level as well. Just keep that in mind. Okay. Now that's going to be step number one on the top side for the dollar versus yen, and this line right here and this line right here is where that area comes into play. I'm going to put it in yellow here. So that's pretty simple, isn't it? That's pretty simple to see, pretty simple that we to understand. Need to get above that level in order to push this this market higher. If we get above that level, that's good. The other level to get above is a 106.20. Well, actually, I'm going to take a look at the 200-hour moving average here first. Why is a 200-hour moving average important? Because you see this green line right here. How long has it been before since we traded above it? We have to go back to June 1st, okay? June 1st, that's the beginning of the month. So for the whole month, we've been below the 200-hour moving average. We need to get above it at 106.03, moving down toward this trend line right here, which is another thing. So you can imagine that the moving average is going to come down to that level, and that's where we need to get above if we're going to trade higher for the dollar versus yen. So understand that moving average, understand this trend line, and then understand the 105.17 to 54 level. Get above that level, get above the 106 level, and things are going to be moving higher for the dollar versus yen. On the downside, what do we have? Well, we're near the lowest level going back to what, 2009 or whatever. So if we move below the low price for this week, at 103.53. Look for the price to head on down toward we're going to be looking down toward parity soon. Traders are going to have that in their minds, so be aware of that. But right now, we're seeing some support buying in the dollar versus yen. Did nothing here in trading here today. We'll see what happens in trading tomorrow or next week. All right, some of the other currency pairs really quickly. The dollar versus Canada. What's important here? Well, if we look at the daily chart, we have this trend line connecting most recent highs. Also watch the 100-day moving average. On the downside, watch the swing low right here, the swing low right here, swing low right here, and we had a swing low at that area as well. We've been above and below it here, but I like the fact that we found support at 128.31 to 128.60. We're currently trading above that level, so understand that if we stay above it, that's going to be more bullish for the dollar versus Canada. If we move below it, it's going to be more bearish. Also, on the hourly chart, lots of moving averages here. And the 50% retracement, we're currently at the 50% retracement of about the week's trading range. That level comes in at 128.72, so we're at a neutral area here where we are right now. We need to get outside of that range. The New Zealand versus US dollar holding the 100 and 200-hour moving average. Key level here, 38.2% retracement. That's of this move up from the May 30th low to the high that we saw on June 9th. 38.2 not only held once but twice right here. Comes in at 69.67. That's going to be our key level on the downside. Stay above it, it's more bullish. Move below, it's more bearish. In between that, as long as we stay above the 100 and 200, which we did all day here today, we're going to see more bullish and then move up toward the 171.47 level is where we'd look for. And finally, the Aussie versus US dollar. Here's the 100 and 200 bar moving average and 100-day moving average. The 100-day moving average, I'll go to the daily chart here. We've traded above and below for the last 5 trading days. That's okay. That means that the market doesn't know what it wants to do. If the market doesn't know what it wants to do, it's going to go and it's going to stay around key levels like the 100-day moving average until it decides to move away from it. And so we're going to, with this activity here today in an early trade next week, we're going to look for a momentum bar either to the upside or a momentum bar to the downside. That's going to hopefully take us away from these areas, okay? Away from these areas. And we're going to try to trade as close as we can to that level. If we do that, we'd be on our way to potentially a nice, good trade as the week starts off. So that about does it. My name is Greg Michaelowski from ForexLive.com. Good fortune with your trading. Bye-bye now.